What's going on? Just me and Justin hang out here. Justin being the expert, me being the beginner, coming out to you guys live, going over some, indicators, things that we want to go over. But most of all, we are touching on moving averages. Actually, need a U-Haul for that, Justin, or
No, you actually don't. Just need a good eye and basic skills in math computation. Not even that.
okay, okay, for sure, for sure. I mean, so moving averages, I just got lines on the freaking screens of my crypto pages. I want to start trading, and I see all these guys, looking at lines and saying, hey, these lines give me money. Doesn't make any sense to me. I just know that they're called moving averages. Uh, I'm just trying to look for something in depth here. I have no clue what's going on.
Sure. Well, I can explain some of the basics. So basically, all a moving average is it is the sum, the average of the average price range over any period of time, based on the settings that you put on there. So if you're looking at the daily chart on Bitcoin, for example, and you want its 10-day moving average, it means it's going to take the high of that day and the close of that day, and subtract the latter from the former, and give you the average price of that day, and then it's going to add up that average price for 10 days and divide by 10 days. So all you're getting is your average price for the last 10 days, and then that is graphed out on a line, and that just flows along with the price to show you, on average, where is the price.
Definitely. So all I'm kind of looking at is these lines on this screen is based off of an average price, is what you're saying.
Yeah.
Moving average price. That kind of makes sense to me. Now, maybe I can dive a little bit deeper. What's the difference between something like a simple moving average and an exponential moving average? Because the only average I know is to add everything up and divide by how much you got.
Sure.
So where do these come into play?
Sure, well, it's pretty simple. A simple moving average is exactly as I've described it. It's the average price range of a particular period, divided by whatever range that you want. So if you want a 10-day moving average, you're going to divide the averages of the last 10 days, 20 the last 20, 50 the last 50. But with an exponential moving average, what you're doing is you're taking that result and then you're multiplying it by a weighted factor. That weighted factor is dependent upon the oscillation of the price. And that gives you a much quicker responding indicator to use. So for a simple moving average, it's a little bit slower. It won't, in practical terms, a simple moving average will not respond to quick price movements as quickly. It's more stable, it's more consistent, and it tends to show you the longer and larger trend. Whereas an exponential moving average can be more helpful in charting out when there's been sudden price spikes or dips. It responds much more quickly to a rapid shift in price as opposed to a simple moving average, which moves much slower. The only problem from a practical standpoint is that whereas a simple moving average might miss a rapid price spike and give you an indication slower and not in time to catch profit on a market, the exponential moving average is subject to fake outs. So false breakouts or sudden dips, flash crashes that just bounce right back up. So the exponential moving average can, if you're not careful, give you false signals.
Definitely, yeah, that kind of makes sense. So say I'm a guy, I want to do some charting right away.
Sure.
I want to look at these kind of moving averages. Can you take me through maybe some like point and click type stuff that I can do? I know I want to use TradingView myself. Can you show me kind of on the screen how to use that, how to use TradingView and set up a moving average, I guess?
Yeah, sure, absolutely, not a problem. I do recommend that people use TradingView. It is a good, free, easy to use website.
But
I have a custom script here for my moving averages, but I'm going to show you guys how you can do this without it. So I'm going to take all this crap off. So all you're going to do is you're going to pull up any chart. I have the Bitcoin price chart pulled up right now, and I'm on the daily chart. So all we're going to do, make sure I'm okay, good. All we're going to do is go to indicators, and you can just type in moving average. Okay, and all you're going to want to do is click on the simple moving average, the built-in script. You can see the exponential moving average and the simple moving average right here. So you're going to click on that, and we're going to want two of them will do for now. All right. So now you've got your moving average. It's going to start you off with a. You see here where it says 9 and close.
Mm-hmm.
Well, 9 refers to the range of days. So right now we're getting a 9-day moving average calculated over 9 days. So from today's
So
day,
like 9 days just like, or is 9 days like? I mean, like, so if I had an hourly time frame, does that go off the candles that nine, or does that go off always?
yes. So it's based off. It takes its price off the close, is what it's saying here. So it's going to take the average of the. So if we're looking at the daily chart, when you
Yeah,
have 9 as your range, it's going to take the average close of the last 9 days, and the sum is going to be this line right here, graphed out. Okay.
that makes
Now, when
yeah
you
that makes
switch to the if you switch to the 1 hour chart, it's going to be based off the closes of the last 9 hourly candles. So it's going to be the average of the last 9 hours.
okay. Yeah,
Say
that makes sense.
if you go to the 4 hour chart, then it's going to be the last of the last 36 hours because it's going to be based off the last 9 closes of these 4 hour candles.
Definitely. Yeah, that makes sense
And the same with the
for
weekly.
sure.
Same with the weekly. We're looking back at the last 9 weeks. Now, as it relates to trading, we'll switch back to the daily chart. There's lots of ways that you can use these. So I've got two right now, but it's only showing up as one because they both have the same settings. So we'll go ahead and click the little cog setting right here, and I'll show you guys how I like to use it. So we'll set this one to 10. We see style and inputs. So inputs on length, we'll just go 10, and we're going to base this off the close, and we're going to hit OK. And now we've got 2. So we'll go to our second one here. We'll click the little cog, and we'll change its length to 20, verify that it's on the close, and we'll hit OK. All right, so now we have a very basic, simple moving average indicator that we can trade off of. Now, there's two things that I want to point out very quickly, and these are your most basic things to look for. You're looking for crossovers of the moving average is how you use this indicator. All right. So if you look here, the way you always want to use these two indicators, you have a fast one, the 10, and a slower one, the 20. Now the fast one is always going to be one that's hugging price the closest, and the slower one is always going to be one that's farther away. Now when you see the slow, here I'll go ahead and change the colors here, make it easier. Okay, so the slow, the 10 is the red, and the fast is the fast one is the 10, the 10-day moving average, and the slow one is the 20, the blue one. All right. Now, when you see the quick or the fast moving indicator, the one with the smaller range, we'll go back here, cross over the slower moving average, that is a buy signal. All right. So this is sometimes referred to as a golden cross. And you can use this on any time frame, just as long as you have, you can use this on the hourly time frame. And I've all of a sudden lost my Bitcoin chart. There we go. So we can see here. All right, so right here, here's your buy signal. And then when you see the quick indicator move underneath the slow indicator, that's your sell signal. So if you see right here, this indicator would have told you to get into the market right here, right at this golden cross, and it would not have given you an exit signal until right here, getting you out of the market for this dip. And if you would have followed that indicator, just based off this indicator and did what it told you, you would have had a nice 10% trade. Now right here, it's getting you out of the market right here, and it's getting you back into the market right here. And if you would have entered the market based off this indicator and exited right here, when you get the next death cross, as a turn down is called, you would have made a nice 5% trade. So that's a basic way to use to use this indicator. Another thing that you can look out for is this indicator can also tell you where to set your buys and sells. Okay? So if you are in a bull market, so after you've had your golden cross and price is moving above the moving indicator, all right? You can see here that when we're in a bull market, or excuse me, when we're in a bear market after a death cross, price moves below the moving averages usually, right? And when it rises back above it, we get a golden cross. Dips back down below it, we get a death cross, and dips back up above it. Price moves above the moving averages. We get a nice golden cross here. So that's a basic pattern to look out for. When an asset or cryptocurrency is bullish and price is rising, the moving average acts as support. So you can see here price moves up, comes back down, touches the moving average, moves back up, comes back down, and where does it turn around at? The moving average. Always turning around in the vicinity of the moving average until we cross back underneath it, and then the moving average turns into resistance. So we see here that the moving average is now acting as resistance until we break through it and turn it into support again. So the way that you can use this for your buys and sells is set your buy orders in the vicinity of the moving average. And conversely, and then follow the indicator for yourself for when you exit the market, but you can use this, you can use the moving average to indicate where to accumulate at the best price.
Sure.
And then when you are in a bear market, as we see right here with this death cross, the moving average acts as support, so we know that price is going to come back up and test this support always. Where does the price get rejected at? The moving average. Price gets rejected at the moving average. We break through here, support. So if you're buying on a dip underneath the moving average, you can set yourself at the vicinity of the moving average. Set yourself for the vicinity of the moving average, set yourself for the vicinity of the moving average, and then you would have got this golden cross right here, which would have given you your signal to enter into the market again.
Oh, this all pretty much makes sense, man. It's great. What would be, kind of a good setup for myself? I see some of these people putting some stuff up on their, on their screens, and everything just looks too jammed up. So what would be a good, just wanted to use moving average? What would be settings that you would want me to use?
Sure, sure. Well, I'll show you in my opinion, what I think, what I typically use. And just play around with these settings a little bit sometimes. Sometimes you just have to try different numbers and see. I mean, the proof is in the pudding. You want to have a setting on there where you go back and look and see and okay, does the moving average, do I have it set in such a way, is my number set in such a way that it accurately reflects what the price does? So does the market turn around at the 10-day moving average? Does the market, does the moving average act as support for the price? Does the moving average act as resistance for the price? Is it profitable for the settings that I have? When I get a golden cross, is it accurately telling me when I should enter the market? And a death cross to exit. So you just go back and, okay, well, if I'm just using this indicator and I entered here at this golden cross and exited at this death cross, I would have made 6% profit. If I would have entered at this golden cross and exited on this death cross, I would have made another 6% profit. So clearly we can see that these settings are working. 10 and 20 are very common settings to use, especially when a price is not experiencing lots and lots of volatility. Even though Bitcoin is quite volatile, we're on the hourly chart. So I'll switch to the daily here real quick. Okay, now, so we can see here that this is pretty good for this 10-day indicator. We break through, get that death cross, come up, break through. You can just play around with it. Now, typically, I like to use the 10 and 20 on the simple moving average. I also like to use the 20, and I like to use the 50. Okay, and this tends to give me a little bit of a better range. So we can see here that 20 is really acting very well. I'm getting better, more longer term signals. We can see here that based off the moving averages, we would have exited the Bitcoin market at about 14, the high 14,000s, around 15,000. and that it was preserved a lot of capital for us, and now it's telling us to re-enter now at 10,000. So that would have saved us quite a bit of capital. On the daily, you can see that we should have entered the market at 4,000 and again exited it at 14,000. So that would have been an extremely profitable trade, almost tripling your money. So we see that this seems to be pretty accurate. We see that the 50-day moving average um, can catch the dips. Obviously, the dips go down to the 50-day moving average, so that's a good place to set. See here, you could set it always. You can always have a buy order set in the vicinity of the 50-day moving average, of the slower moving average, and that way you can accumulate these great dips. I mean, even if you just had a sell there, as soon as it executed, you could have sold for 46% profit once the price came back up. So there's all kinds of good ways that you can use these to your advantage. The 20, the 50. Sometimes people use the 50 and the 100, or the 50, the 100, and the 200. You can have three on here, and you can have it as complicated or as simple as you want. My recommendation is just to play around with these settings a little bit. And what you're looking for is you're just looking for it to work. You're looking for it to accurately represent support for the price. You're looking for it to give you accurate signals for entering and exiting the market. And then once you slap this on here, just go back and test it throughout time. And ask yourself, okay, if I would have followed these indicators' advice and used it for my entering and exiting the market, would I have made money? And you can clearly see that if you would have been using just the 20 and the 50-day moving average for Bitcoin and trading it for over a year now, you would have made quite good money. It's very simple. It would have told you it would have told you to enter the market in April of 2017, and you didn't have to do anything until July of 2017. You know, you would have avoided this, you would have avoided all of this, and then you would have entered again at the end of July and not exited until September. And then you would have entered again in October, and then you would not have exited again until the middle of January. So for those who just want to buy and hold, this is probably the best indicator that you could possibly use for your long-term trades.
Dude, sweet, Justin. This is, I mean, it's kind of crazy that just like putting something like this, onto a chart with maybe a coin that you really have faith in, and then you just put this little line that tells you so much. I kind of just expanded, my kind of knowledge on all that. But it's nuts, just like seeing that just like a simple math problem can help you solve actually big trading problems. Because I mean, for me, there's plenty of these coins that are coming out. And I want to buy into them because they have great things that are coming out. But I mean, I'm gonna try these things out. Just try to put them on my charts and actually see where these things are at. Maybe build a plan a little bit. Perfect. I appreciate it. Hey, I look forward to actually like building more, testing this out all week long and kind of coming back with some results and seeing what averages. But dude, I look forward to it. And for all the people out there that don't really know what's going on, this is our first part of our video series. Indicators left and right. I'm going to be hitting up Justin with tons of questions, and I'm going to be showing some results of what happens when I do it. And Justin continue to throw out his results. But any other questions that you guys have, feel free to shout us out. Hit us up in the comments. Hit us up with anything that you want to do. Shout us out on Twitter. Shout us out on, YouTube. Find us on our Discord channel. All the above. But look forward to it, man. Look forward to creating this video series and, kind of putting more plan into action. Man, this is great.
Excellent. Well, I was glad I could help, man. Thank you, everybody, for tuning in. Until next time. Hey, guys. Does the bear market got you down? Are you feeling worried? Have you been holding on to an altcoin bag for far too long, hoping for summertime booms, but all it's been is winter and springtime busts? Why don't you head on over to our Discord server or our website, crackingcryptocurrency.com, and an invite link to the Discord server will be in the notes section down below. Hop on, join us. We've got a lot of traders, a lot of investors, a lot of just crypto lovers and miners on there talking all the time.
you can find a channel that you like and fit in and ask questions. Feel free to DM me or any other of the other admins. We'd be happy to help you out and introduce you to the community. We're excited to see you guys grow. Hope to see you in there, guys. Thank you.